Good morning, all. Today, my topic of discussion is evaluation of banks in India. The entire banking space which we witness today is not complicated. At the end of the session, you will realize that the types of players in Indian banking sector are not too many. We can count them on our fingertips. There are scheduled banks and non-scheduled banks. Within them are commercial banks and cooperative banks. Within commercial banks are public sector banks, private sector banks, rural banks, and foreign banks. Some new players have also come up. They are payments banks and small finance banks. Reserve Bank of India is the authority which regulate all these banking sectors in India. This entire banking space is not very old because the Allahabad Bank, the oldest public sector bank, came into existence in 1835, 155 years back. Canara Bank was established in 1905. When Allahabad Bank, Canara Bank, for that matter, many other banks were working in this country. There was no authority to control them. There was no institutions to regulate them because Reserve Bank of India came into existence in 1935 when Reserve Bank of India Act 1934 was enacted. Even at that time also Reserve Bank was banker to the government and it was the sole authority to issue banknotes. RBI got the regulatory powers in 1949 when Banking Regulation Act 1949 was enacted. Once RBI got the regulatory powers, RBI asked all the banks working in the country to get themselves registered under the second schedule of RBI Act 1934. RBI ने कुछ benefits भी उनको offer किए that those banks which get themselves registered under the second schedule of RBI Act will be able to participate in the clearing house system of India and those banks will be eligible to borrow money from Reserve Bank of India. RBI ने कुछ conditions भी लगाई that those banks will have to comply with the instructions, guidelines, and directives of RBI. Those banks will have to share such information as required by RBI from time to time. And those banks will have to keep minimum of rupees 5 crore of their core capital permanently deposited with the Reserve Bank of India. Most of the banks at that time agreed to get themselves registered under the second schedule of RBI Act 1934. Those banks were called scheduled banks. Now we understand that a scheduled bank is one which is included in the second schedule of RBI Act 1934. इंडिपेंडेंस से लेकर बहुत समय तक इंडिया में बैंकिंग सेम स्लो पेस से चलती रहेगी विदाउट एनी बिग चेंज. First big change came in 1969 when Government of India nationalized 14 private sector banks. And the big change came in 1980 when government nationalized another batch of 6 private banks. All these nationalized banks are called public sector banks. A public sector bank is one in which the shareholding of Government of India is 51% or more. So from independence up to 1980, in India, there are basically two types of banks working in this country. They were development banks, or we can say development institutions, and commercial banks. The names of the development banks were ICICI, IDBI, IFCI, UTI, HDFC, and IDFC. The names of the commercial banks, as we all know, State Bank of India, Punjab National Bank, Bank of Baroda, Union Bank of India, Canara Bank, etc., etc. As per practice, the working area of these development institutions and commercial banks were clearly demarcated. Development institutions used to give loan for infrastructure purposes and for setting up a big project. So, because these loans were of high ticket size and they were repayable over a very long period of time, these loans were given in the form of term loan. Once the project was set up, the promoters of the projects used to approach commercial banks for meeting their day-to-day requirement, and commercial banks used to give them working capital finance. We can take out an inference now that the ticket size of working capital finance used to be much smaller than the ticket size of infrastructure loan or project loan. Because इंफ्रास्ट्रक्चर या प्रोजेक्ट लगाने के लिए बहुत बड़े अमाउंट की रिक्वायरमेंट रहती है और डे टू डे रिक्वायरमेंट मीटअप करने के लिए बहुत कम अमाउंट की रिक्वायरमेंट रहती है. बट एज पर स्टैट्यूटरी stipulations at that time, development banks public से सिर्फ फिक्स्ड डिपॉजिट्स ही ले सकते थे, whereas commercial bank could accept current deposits, saving deposits and fixed deposits. So we understand that the area of deposit mobilization, or we can say the area of resources mobilization as available to commercial banks, was bigger than the area of resources mobilization available to the development institutions. अगर किसी बैंक के पास डिपॉजिट्स होगा लेकिन लोन देने के लिए एवेन्यूज नहीं होंगे, दैट इज अ लॉस मेकिंग प्रपोजिशन. So to earn interest income and to increase their profitability, commercial banks, besides giving giving working capital finance, they also started giving infrastructure loan and project loan. In other words, we can say commercial banks encroached upon the areas of development institutions. So development institutions ने RBI and Government of India को approach किया for allowing them to set up commercial banking subsidiaries so that they can also accept current deposits and saving deposits from public. So after independence, for the first time in India, agreeing on the request, Government Reserve Bank of India issued certain licenses in the private sector. These licenses were given to ICICI Bank, HDFC Bank, Axis Bank, IDBI Bank and IndusInd Bank. इन प्राइवेट सेक्टर बैंक्स के आने से इंडियन बैंकिंग स्पेस में एक तरह का एक कंपटीशन का युग स्टार्ट हो गया. That competition started between private sector banks and public sector banks. Because all these public sector banks were high-tech from the very inception, to compete with them, public sector banks also required to adopt technology. So an era of technological advancement also began in the Indian banking scenario. So in banking after 1994, for a quite long time, was going on at a very fast speed with competition and technological enhancement. When in 2004, RBI issued 2 more banking licenses to Kotak Mahindra Bank and Yes Bank. Again in 2015, RBI issued 2 more licenses to IDFC Bank and Bandhan Bank. In 2015 itself, RBI tried to give a new direction to the banking industry in India. RBI ने कुछ ऐसे बैंक्स को भी लाइसेंस दिए जिनका वर्किंग एरिया वाज एंटायरली डिफरेंट फ्रॉम ऑल दीज commercial banks working in the country. These banks were called differentiated banks. In 2015 itself, RBI issued 11 licenses for setting up of payments banks and 10 licenses for setting up of small finance banks. Before we proceed further, first let us try to understand the difference between payments banks, small finance banks and commercial banks. Payments banks can accept deposits but they cannot lend. In deposits also they can accept only current deposits and saving deposits but they cannot accept fixed deposits. पेमेंट्स बैंक्स में एक डिपॉजिट अकाउंट होल्डर के अकाउंट में एट द एंड ऑफ द डे 1 लाख से ऊपर बैलेंस नहीं हो सकता. मींस कोई भी डिपॉजिटर अपने अकाउंट में 1 लाख से ऊपर नहीं रख सकता. Whereas in small finance banks they can accept deposits, they can give loan, but the ticket size of one loan cannot be more than 25 lakh rupees. मीन्स वो एक बोरोवर को 25 लाख से ऊपर लोन नहीं दे सकते. Whereas commercial banks, they can accept deposits, they can lend also without any limit. In accepting deposits, there's no limitations on them as applicable over payments banks. While giving loan also, there is no limitation of giving loan as is applicable over small finance banks. Of course, at the time of giving loan, the commercial banks will have to meet the statutory requirement of keeping certain capital. इस regulatory capital के बारे में हम अपने next sessions में बात करेंगे. latest new change in the Indian banking arena is consolidation of public sector banks. पिछले कुछ सालों में Government of India has consolidated 27 public sector banks into 12 banks. In 2017, all the subsidiaries of State Bank of India were merged with State Bank of India. In 2018, Vijaya Bank and Dena Bank were merged with Bank of Baroda. In 2019, which were implemented as on 1st April 2020, certain other banks were consolidated together to make bigger entities. Oriental Bank of Commerce and United Bank of India were merged with Punjab National Bank. Syndicate Bank merged with Canara Bank. Andhra Bank and Corporation Bank merged with Union Bank of India. And Allahabad Bank merged with Indian Bank. At the time of announcing this merger, Government of India made its intention clear that the government wants only 3 types of public sector banks in the country. And these are the banks with strong national presence and global reach. Means these banks will be of international character. These will be State Bank of India, Bank of Baroda, Punjab National Bank, Canara Bank, Union Bank of India, and Indian Bank. And second type of banks will strengthen their national presence, means they will be of national character. These will be Bank of India and Central Bank of India. And third type of bank will be focusing on the regional issues. These will be called regional banks, and these will be Indian Overseas Bank, UCO Bank, Bank of Maharashtra, and Punjab and Sindh Bank. Though government has not specifically described the working areas of all these 3 types of banks, but the intention of the government is very clear. Government wants that the global level banks will focus on projects and infrastructure financing and will be having overseas presence. Whereas national level banks will meet the requirement of SME sector, thus aiding Make in India. Whereas regional level banks will concentrate on retail and priority sector, tax collection, miscellaneous functions such as financial inclusion and subsidy distribution. Government has also made their intention very clear that the government has clarified that this process of consolidation will rationalize the demand on government financing for capital infusion. As we all know, time and again, Government of India infuses capital in the public sector banks. These capital funds आते कहाँ से हैं? They are nothing but the tax collected from the general public. अगर इन tax collections को optimally utilize नहीं किया गया, that is a wastage of national resources. So, in my opinion, government should bifurcate this capital infusion into 2: developmental capital and survival capital. A global level banks should be sufficiently capitalized, even more than the minimum required as per Basel norms, because they have to compete at the international level. Whereas national level bank can be given capital, which is minimum capital as prescribed as per Basel norms. And regional level banks, their capital structure should not be linked with the Basel norms, because they have to work within India. Even government guarantees also there. Even if they are not provided any capital, these banks will work very smoothly. So thank you for watching this seminar. Please, for other tutorials, please register on our website www.bankingquest.com. Thank you very much.